Hello, everyone. This is Sam Wong again from Finance Analytics Services Team LLC. It was a high volatile week with lots of new investors trying to digest last week. China witnessed 17.5 billion worth of portfolio outflow last month, an all-time high according to data from the Institute of International Finance. And as you can see, the Dow Jones Industrial Average was down 2.24% for the week, and Nasdaq was down 3.25% for the week. And you can see pretty much, they are running into exactly the same direction again. I mean, really in the same thing in the Monday, and then Tuesday, maybe Wednesday a little bit off because you can see Nasdaq have a little bit more volatility at a different kind of string. But then, obviously Thursday was again the same kind of directions, a very strong, solid rebound. And then Friday, unfortunately, have bad news and it slipping down again. So the two indices were following pretty well with the overall directions in the market. So I'm trying to walk you through why they're going down as I go through and show you some of the chart with the FANG performance that they were reporting in last week. So Twitter announced he had reached a deal to sell the company Elon Musk for $54.20, and as you can see that they closed around $51 at high and like around $50. So there's still a little room if you're bad than that. This deal is gonna cover and you can still gain from it. Dow Jones Industrial Average, as you showed in the graph earlier, that it kind of recovering from last previous Friday. That would also have a huge drop and then rebounds back. So we hopefully we will see the same thing the coming Monday. Although the futures also indicated was going down, but we don't know until the Asia market open. It's actually not going to be open because I think Nikkei, Japanese and South Korea probably open, but China they are in observation holiday, and also Europe have to have the market open in order to see how things were going. If they were going up, then maybe the momentum pick up and some of the flow of the cash and on the side and buy at a deep. If not, you may go down further. So the reason Tuesday the market was also pulled back again, is because of Google Alphabet wasn't reporting very good earnings. The sales growth for first quarter slowed by 22%, and also China COVID lockdown as well in Beijing news came out, so that was creating the market down. The market also tried retesting April 14 the really low volume and sell high was doing, but it didn't succeed. So the market actually coming back down. On Wednesday, however, the Dow ended up rose 62 points, which is 0.2%, while S&P 500 gained 0.2%, and Nasdaq Composite failed to hold a balance and the day with a loss. U.S. economy contracted by 1.4% in first quarter, but the economists estimated a minus 2%. So Wednesday market was kind of coming back, but if a drag Tuesday wasn't looking good, it dragged by Alphabet. You can see Alphabet that it was actually for the week down 4%. But then if you look at 6 months extended, they were actually losing 12%. And if you look at year, they were lost about 20% already. So they're pretty significant slip from Alphabet from a year perspective from a record high. So you can see the record for 3,030. But then Facebook were blocking on some surprises because the last quarter earning actually saying they're losing subscribers because of the Apple adjustment of the regulation or whatever the apps. They're creating some changes to which impacted the Apple Meta platform, Facebook, Epi as well. But however, they actually this quarter were saying that they were momentum and actually gained subscribers again. So the driving the market was doing well. Facebook trade for 16 times the estimated earning. A valuation seems to be appealing for a company producing 33% net margin. So that actually pushed the market going up. And you can see that before before the earning announcement, actually, and also because of the over market direction pressure of the Fed hikes, Facebook really getting very large, big pressure that really trading below $200, but then like 107 in this case actually was close at 175, somewhere around that range. But then because of the really amazing news for outlook, the stock actually rebounded significantly, in just in the day after Thursday. So that brought the market actually brought it up. With Dow actually and S&P 500 as well, best day in 7 weeks. So U.S. listed share of Alibaba and other Chinese tech stocks jumped on Friday as well after the Chinese government suggested it would dial back its crackdown on sector and pledge further stimulus effort as the country faces slowest growth in 3 decades. China has set a 2022 growth target of 5.5%, the slowest rate of expansion since 1991. And we should waste no time applying more policy tools and enhance the strength of adjustment in deal costs. The cabinet in the Chinese committee reported repeatedly saying on Friday. Exxon earnings per share jumped $2.07. Revenue jumped 53%, $90.5 billion. Consumer spending up 1% compared to March. Yet the Amazon performance, which is what you're going to cover here, I go over Microsoft later. Amazon was kind of disappointing. So the stock actually dropped 13% just in a day. It was very steep. And this stock, if you look at Amazon, I mean, their 52-week high was 3,773. So for a year, a comparison now, they lost 1,300, which is like almost close to 30%, like probably 26% roughly. In a quick calculation on how much they had lost the value from a peak of the year. So this stock, apparently people were expecting it because the retail business slowing down, but then they also impacted by the cloud business as well. So that's why they actually most of the revenue come from cloud, but they actually experienced the challenges. So that's why it's slowing down. So that create that worry then the investor future weaker consumer demand. So the stock will actually bring it the more overall market decline, especially the last 30 minutes of the market before the close. You can see that the market has stepped up pretty significantly. Exxon increases ExxonMobil stock buyback program so as much as $30 billion through 2023. In January, the oil major resumed buyback, announcing $10 billion at the time. Chevron earnings came in at $3.36 a share. Revenue lift 70% to $54.37 billion. However, Chevron stock fell 3.2% to $156.65. That's probably something to do with the overall market and the pressure, coming from the high-tech disappointing announcement. Apple also missed their earnings, so we're going to move to Apple. Yeah, as you can see, they also missed the earnings. The stock also re-adding that going down, but it's a much more not as significant as Amazon, just 2%. But then the high end was 183 for a year. So you can see the graph that they actually before earning announcement, it was actually have a good expectation going up. And part of the thing is they have the iPhone. Their iPhone sales is not as well as expected. I guess part of the reason, if you look at the iPhone industry, you change it. It used to be every 2 years you have a new phone, but now they're doing it every year. So and the phone doesn't really crack that quick. So people don't really change your phone just because they love the new phone. So that's probably one of the reasons. The other thing is, there's a lot of demand in the past is from China buying Apple phone, but with COVID and with the consumer, actually suffering from the economic activities. So people income basically pull back as a whole. So only rich people probably still buy the new Apple, but a lot of people just chose not to do it or buy their own local brand at the moment. So that's also impacting the Apple performance. So we are the instrument trust was also down. Public storage slipped 50-day line. With everything going on, then Tesla, which is another one, that actually rebounded 12.5% on Thursday. You can see this, when the market was doing good on Thursday, it was the index, everything, and it's just pulling back strongly, 12.5. But then it actually still ended a week close to $871 from $1,000 in a week, beginning of the week. So for the week, Dow Jones again slipped 1,100 points, and Nasdaq pulled back 500 points. So it's pretty significant because things were not doing very well. And Microsoft, we look at Microsoft too. Actually, we reported pretty well. So the stock actually rebound back for a week. Our FAAMG, they were actually up 1.57%. Also, Facebook as well as up. And you can see that they were actually at one point pulled back really low at a week of $275, a recent low, but then you were jumping back up. So the stock again, 52-week highs at $350. So it's been discounted pretty well as well. Kevin Wood's ARC Innovation is about to cap off its worst month ever. Oil trade mix with Texas Intermediate down, WTI down 1.26% to 104.3 cents a barrel. Brent crude, the international Brent rose 1.6% to 109.40 cents a barrel. Gold rose 0.56% to 1901.1 per ounce. The 10-year yield again climbed to 3.8 basis point to 2.9%, and that's just where again why the market as a whole wasn't looking very well. If you look at the macroeconomic factors, your treasury yield will really up. Interest rate going to have a high increase that kind of expected with Powell was announcing last week with IMF what his plan was. So this stuff that really. And then the COVID spike in China. So those are actually the negative catalysts, I would say, bad news to drive. And oil price is still a very high volatility up and down. So it's very hard to see, if you fall back $100 below again, then the market may be seeing it as good and you'll go back up. But a lot of analysts, some people would just really, I don't know, maybe they write a headline to just draw your attention to read the news saying you'll be $300 a barrel. I can't imagine the economy if we're under $300 a barrel, what kind of world we're living in, how inflation going to be able to drive down instead of it would go even higher. The 10-year rate is now 1.5% higher than S&P 500 dividend yield. And the Bitcoin fell to 39,000, so that was from a 42,000 dropping down a little bit. So quite material, 20% drop as well following the market. The difference between the two for a 10-year rate and S&P 500 dividend hasn't been that wild since early 2011. VEST has recently jumped up to 32, 33, when a few months ago it was low at 15, so it's like double. When VEST number is very high, it tells you the volatility sentiment is really high. That means you expect the market go up and down, and also mostly indicating that the market will actually fall into the downward directions, yet the higher the number that is. Investors are eyeing two events next week: the next policy meeting of Federal Reserve and next meeting of International Oil Producer Cartel led by Saudi Arabia and Russia, and also obviously the expectation could be when the interest rate actually going to rise, which will be, according to the Fed, will be Powell will be early in May. The big high-tech FAMG, just like I went through the statistic review that done their earnings, but the earnings season continues. Fed is very likely to hike interest rate by 0.5%. That shouldn't be surprising to the market. It should be pricing into the reaction we see this week, and to combat inflation, you know what I mean? Inflation remains high and food are very expensive in America. That actually probably hold true for the rest of the world as well. The fear of recession is out there. So that is driving the, not very positive. People sell off and worry about the market will actually go down further. Hopefully there will be earnings surprise and catalyst to reverse the market next week. And hopefully Monday will be just like this Monday, that Friday have a deep sleep and then you just rebound back to stabilize the market. Again, sell at a strength. And the strategy now, I was just telling you, because for those who won't sell at it, you're kind of stuck with your stock, but you picked the stock for good reasons. So you want to buy more, but instead of looking in the market every day, you'll probably put it in the system limit buy, or call your broker and set up the prices for the range. I will set up 20 to 25% lower compared to the Friday price for some, and then I'll also set up more for 50% lower at the current price of the Friday price, the market close. So then the worst will be still with the cash a little bit to look at what you do. So the example I make it easy for you is, if you have $1,000 right now, you can buy $100 Monday, because you see the market actually at a dip, right? That clearly Dow was down 1100 for the week. It was at a dip, and Nasdaq also rebound by 500 points from a 13,000, break it up from there, right? So, and then $250 you will put in buy for 20% to 25% lower, depending on what kind of stock you're buying. Okay, you got to do that that intelligence yourself, and then you put $500 when you hit 50% of the price lower. So the worst, then you will see how the market look and how the Fed rate hikes go in inflation. So that it will be the strategy I put it out there for you. You may think it's crazy, but a really simple example is, you look at Tesla. It was from 700 jumping all the way back to 1100. And guess what? Now it's at 870. Extremely volatility. Well, 870 to go down, that's also upswing potential to over 1,000 again, but also has a same downward potential to be 700 or even lower, 600. So in order to make money in this type and don't want to watch it every day, you set up that strategy. If you really get down to 50% lower and you still go down further, I mean, the confidence of coming back up, rebounding after walking through recessions is fairly optimal. As such, the company doesn't go bankrupt. The problem about 2008, when the market crashes, if they know bail out some of the company actually restructuring, they file bankruptcy anyway, or they change the name of the company, and reissue stock. So your stock that you own is actually worth nothing either. So that is the way. Be very careful that the index wise may not drop 50%, because this is just a specific stock that I'm telling you to go and set up the strategy. And you can see that, right? Very good example. HYLM, robots, Fastly, Pinduoduo, PDD, Baidu. I mean, I can give you a whole list of stock in the market this day that I was propagandizing in the past, last 2 years, that actually the valuation have dropped significantly. In some cases, they will already break below IPO price. So for short term, if you're going to trade that, energy, material, grocery store like Kroger, probably the one you want to watch for if you want to trade short term. But something to bear in mind, if these stocks also flip, they will hit hard. Because right now it's up. When it's flipped, it could go down 25%, 50%, just like the other stock I see. So I must give you that warning. And I have a video next to recommend 2 stocks to buy from the tech space. Hopefully, if you have any questions, just send me a message, and have a great and wonderful week.